Hi, this is Matthew Cratter from Trader University, and today I want to talk about my favorite oil stock. If you're interested in Warren Buffett, value investing, dividend stocks, or just want to see what I'm trading and investing in these days, be sure to hit that subscribe button. So I've been getting lots of questions from everyone about the best way to invest in crude oil and crude oil stocks. And the problem with investing in crude oil at this point is even though prices are low or seem to be low, at least by historical measures, if we look at the futures curve here, these are the crude oil futures, we can see that the oil futures are pricing in an increase in oil. And so the front month, right now, crude oil is trading around $23 a barrel. But even if you just go out to the end of the year, to December 2020, it's already up trading close to $35 per barrel. So this market is already pricing in an increase in oil prices, and it's in what is called contango, which means basically if this is the time axis and this is the price of oil right here, it looks like this. It's upward sloping. And so if you buy crude oil just a month out or so, or a couple months out, you have something that's called the negative roll down. It's got negative carry. So we buy oil here at 29. If the price of oil stays roughly where it is in a couple months, even though it will not have fallen, because of contango, our position will go from 29 to 23. So there's this, you can think of contango or this negative carry as being sort of a headwind. And so to go long crude oil explicitly right here, so say for example at the end of the year, using the December 2020 futures contract, you have to believe that crude oil is going to be above $35 a barrel in order to make money. It's already being priced in for about $35 per barrel. And so this goes for USO, which a lot of you ask me about. This is an ETF that basically buys these crude oil futures. And the problem with USO, and one reason it's performed so badly, if we look at a even a 6-month chart, is that it is getting killed by this negative carry. So basically it buys futures. It buys oil at 29 and sells it at 23, buys it at 29, sells it at 23, or buys it at 32, sells it at 29. It's sort of rolling these front contract months. So then you have the question of, should I buy Exxon Mobil? Should I buy Chevron? These are companies that have been fairly mismanaged, especially Exxon Mobil. So I wanted to share with you guys my favorite oil stock. I don't own it yet, but I plan to buy it at a certain price, which we'll be talking about. So, and for those of you who are fans of Warren Buffett, this is really a great example of one of his more famous sayings, which is the best business is a royalty on the growth of others, requiring little capital itself. And what this means is you basically get to, if you own a business like this, you get to sort of skim the cream off the top without having to have a lot of expenses involved in generating that revenue. You basically get a revenue share off the top, and that's one way of interpreting royalty. So what I'm about to show you is not a huge growth business. A royalty on the growth of Microsoft or something like that would have been more valuable, but this is a way of basically buying crude oil, getting paid to hold it, and having a lot of upside if crude oil goes up a lot. So the name of the company is the Texas Pacific Land Trust. The ticker is TPL, and it's one of the largest, as it sounds like, it's one of the largest landowners in Texas. And it was formed when the Texas and Pacific Railway Company, which was also known as TNP, filed for bankruptcy in the sometime in the 1880s, I believe. And they had all this land. So they were going to build part of the Southern Transcontinental Railroad in Texas, kind of going all the way to California. They filed for bankruptcy. And so they needed a vehicle in which to sell their land holdings. So that's where the Texas Pacific Land Trust comes in. They basically carved out all their land and sold it to this trust, which people could then invest in. This is the land trust. Now, it just so happens that this land trust got very lucky because it turns out a lot of their holdings were in what's called the Permian Basin, which is one of the great oil areas in the United States. It's in western Texas, southeastern New Mexico, and there's just a lot of oil there. Now, TPL was very smart, the land trust was very smart, and they negotiated what are called non-participating perpetual royalty interests, NPRIs. And what this basically means is that for every bit of oil that's pumped and sold that comes out of their land, they get to skim a little cream off the top. They get a royalty off of that. Now, the great thing about this is they don't have to drill. They don't have to invest in infrastructure. They don't have to do anything. They don't have any expenses associated with these royalties. They just get paid as the oil is pumped out of their lands. And as it turns out, they're also in a couple other good businesses. Because they own so much land, they can also charge for land easements. So if you want to build a pipeline across their land, if you want to build a road across it, or power lines, you will have to pay them some money. In addition, recently they set up a water company as well. And if you know anything about oil drilling, you know it's very water intensive. And so they now also get paid. A small percentage of their revenue comes from water sales and royalties. But the real bulk of their revenue comes from these oil and gas royalties. And then if you want to do anything in the Permian Basin, chances are you're going to be crossing their land. And so you're going to have to pay them one way or another. You're either going to have to pay them an oil or gas royalty, or pay for an easement to build a pipeline across their land, etc. So they're in a very good position. And what makes them quite interesting now, you can see when this was written, they had a market cap of $7 billion. Now it's down to about $4 billion. So basically, you're getting to buy all this land and the royalty income associated with it, the future value of the land, and the future value of that oil being pumped off of it. I'm going to attach this investor presentation from Horizon Kinetics, which is a very smart bunch of people. They are one of the big shareholders in this company. I think they own 25% of it. And so you can read through. They do a very good job of drilling into a lot of details. But I'm going to approach this at a high level and tell you what I'm thinking about. And so let's look at their financials. The company currently has a market cap of about $3.5 billion. As of last Thursday's prices, the stock trades closed at $513. You can see it's been very volatile lately. It's been moving up or down 5 or 10%, along with the rest of the market. What makes them very interesting is that they have a lot of cash on the books, $303 million, and they have no debt. They don't really need debt because when you're in a royalty business, as Buffett said, there's not a lot. It's not very capital intensive. And so what they can do is they collect this royalty income and then they pay it out to shareholders in the forms of dividends and share buybacks. Now, if we look at their cash flow statement, and I'll link to everything in the description notes below, we can see that the company for the past few years has generated a lot of free cash flow. These are expressed in millions: 305 million, 119 million, etc. Very low capital expenditure. This is probably just for their water plants. And so they've been able to take that money and pay out dividends with it. And so in the last 12 months, they paid out 46 million roughly in dividends. Now, the reason the stock is down, obviously, besides the fact that most stocks are down, is that oil prices are lower. And so their royalty percentages are going to be lower simply because the income received from pumping that oil is going to be lower, and so the part they get to skim off the top is going to be lower. But if you believe crude oil is going up over the long term, these free cash flow numbers should return. They'll probably be pretty bad for 2020, especially if this oil war continues between the U.S. and Russia and Saudi Arabia. But when things mean revert, and I don't know if that's going to be in a year from now, or 5 years or 10 years from now, this stock has the potential to go up quite a bit. It could be definitely a multi-bagger from these prices, especially if the price of oil goes up and stocks recover as well. And you get paid a nice dividend while you wait. Now, it's unclear what that dividend will be. It's a little bit hard to predict. But if you just think of it in terms of what it was last year, now obviously oil prices were closer to 50 back then. Now they're closer to 20. But if we take 46 million and divide that into the market cap, which is, what did we say it was? It's 3.54 billion. You get about a 1.3% dividend yield. So not a huge dividend at this point, but if oil prices go up, the dividend will definitely increase. And as part of their use of free cash flows, in addition to paying a dividend, which fluctuates wildly over years depending on the price of oil, and also they occasionally sell off some land if they can get a really good price for it, and that contributes as well to their free cash flow. Then they pay that out to shareholders. But what they've been doing in addition to paying dividends is they have been buying back their shares. So if we look at shares outstanding, I believe these are millions, 10.9 million shares as of December 2005, and you can see the share count has just been falling for the last 15 years, now down to just under 8 million shares outstanding. And so when you buy back shares in a company, it increases the earnings per share simply because those earnings are being divided into fewer pie slices. And so you can see that the EPS, earnings per share, has really just skyrocketed. Oil was at much higher prices in 2005, 2006, 2007, but you can see that their earnings per share have really moved from about $1 per share up last year up to $41 per share. So it's just had tremendous growth, especially the last few years, and this is something that we would expect to continue as the price of oil recovers. Now they're currently structured as a trust, but the good news is if you buy their stock, and again, none of this is an investment recommendation. I haven't bought the stock yet, but I hope to buy it on a price dip in the coming weeks. If you own this stock, one problem with owning trusts is trusts or partnerships, you often get a K-1, which is a real pain at tax time, but it looks like that they issue a 1099 instead, which is really nice. So there are a couple catalysts for this stock too that can make it move higher in addition to the future price of oil going up. And let me emphasize, this is what's really cool about this is you're going to be a partial shareholder or trust holder in a chunk of land in the U.S. that has oil. So for those of you who can't pump oil and store it in your backyard, which includes me and includes most people, here's a way to buy some oil in the ground and some land as well, and to be able to really hold it for the long term. This is something you want to hold and pass on to your grandkids. But there's some near-term catalysts as well. They're going to convert from this trust structure to a regular C corp, a Delaware corporation, and this will make it much easier for people to follow them. They're going to look more like a regular stock or a regular U.S. corporation. This should be done by the end of the year, depending on what happens with COVID-19. But they're in the process of reorganizing from a trust into a corporation. The other thing that gives the company real upside is that they do so much business with Exxon Mobil, Chevron, Oxy, a lot of these big oil majors, that at some point, and it won't be right now simply because the oil majors are in a lot of pain, their stocks are collapsing, they're not doing well right now. But it would make sense at some point, especially once TPL becomes a corporation. It would make a lot of sense for Chevron or Exxon or one of these big oil companies to just buy TPL, and then they own the land. They get to basically keep the royalties themselves, and they won't have to pay easements anymore or water rights, pay for the water pumped or anything like that. So these are two catalysts: this conversion to a C corp, as well as a possible buyout. It's not going to happen this year. Oil majors have their hands full with a lot of other things, but this would definitely be something that could happen down the line, and it would be a natural sort of business combination. Now let me show you, in conclusion, a chart of the stock and show you something kind of weird. And this is what happens in bear markets. You get very high correlations between stocks. So here is a daily chart of TPL, of Texas Pacific Land Trust. You can see that it bottomed in sort of around March 23rd, and it has this shape basically like this. It's sort of a dead cat bounce. It is in a downtrend as measured by the moving average lines. So that's TPL. Now let's look at the S&P 500, which is obviously a major stock index. It also bottomed roughly March 23rd and has the exact same shape. So if you're buying TPL in a bear market, as we're in right now, or as we appear to still be in, this stock is going to track the S&P. And this is one reason I'm not in a huge rush to buy it. I think the S&P still has another leg down. And so I'd be looking to buy this on a dip. And it's just very strange when everything moves together. You don't really have the benefit of diversification over short-term time horizons. Over long-term time horizons, TPL should trade based on its own fundamentals. There's no reason it should track these sort of risk-on, risk-off moves that we're seeing in the general market. But for now, this is what's happening. And if we do see, if the oil deal somehow falls through that Trump's working on, or if we get another leg down in equities, we could see this get down into the 400s and even the 300s again, which could be a great opportunity. Now, maybe it just goes up from here. This is something you have to decide for yourself if you're interested in purchasing this. Again, not investment advice. Consult with a financial advisor. But this would definitely be my favorite oil stock if I had to choose one, simply because of the royalty model and remembering what Buffett said, that the best business is a royalty on the growth of others. So here we get the growth of land values and the growth of oil values over the long term. Now, if you found this video helpful, you should check out my courses, my online courses. Financial Statement Analysis Made Easy is a good place to start for all you Buffett fans. If you're more of a trader, I have courses on trading futures, trading options, swing trading with options, learn to trade options like a pro, as well as my flagship course, Learn to Trade Stocks Like a Pro. And this might also be of interest to people, this bear market trading strategies course, where you can learn day trading, swing trading, and other types of strategies that work in a bear market like we're in now. Now, the good news is you don't have to choose between any of these courses. A monthly tuition will get you unlimited access to all 12 courses. So if this is something that interests you, you can go to this page. I'll stick a link in the description notes below. You can click on any of these to see the curriculum. And then if it interests you, you can scroll down here and click Get It Now. Now, normally access is just $125 for 30 days access, but I want to give you guys a special coupon code because we're in sort of a financial crisis here and a recession. So if you go to this checkout page and click Have a Coupon Code right here and type in YT as in YouTube 99 and click Update, that'll take $26 off the monthly tuition. So just $99, you can watch all the courses within 30 days, cancel before 30 days, and you won't be charged again. No long-term contracts, nothing like that. And if there's something that's missing from the curriculum that you'd like to see, maybe a course on a certain topic or a lecture that explains things in a little bit more depth, you just let me know, and I will record a lecture just for you, or a course just for you, and of course share it with everyone. And so in this way, we can really grow this as a great online resource for investors and traders who want to learn how the stock market actually works. Hope you guys found this video helpful, and hit that subscribe and like button if you haven't done so already. Leave me a comment or question in the description notes below, especially if you have a suggestion for what I should make my next YouTube video about. Thanks a lot for listening. I'll see you in the next video.